Hey YouTube, welcome to this video. I'm gonna talk about Open today. First of all, don't forget to subscribe and hit the notification bell on to get latest updates on best stocks. Open is a recent SPAC merger which allows homeowners to sell their home without a broker or real estate agent and saving them money, cost, challenges, and obviously the traditional real estate transactions. Talking about strengths, they are in more than 21 markets and sold 18,000 houses in 2019 and projected 9,700 houses in 2021 and 37,000 houses in 2024. The average time to sell a house is 90 days, and they also have considered to rent out their houses in 2020. So they have ideas, maybe they can put their houses on Airbnb as well. That would be an amazing thing to generate more money from their inventory. They claim more than 700,000 offers are requested by now, and every 60 seconds a request is generated, and also offering home loan services even if they are not buying through Opendoor, as the industry requires a lot of infrastructure and investment, so potentially new entrants are not that big of a deal. In 2019, they bought OS National and providing title solution, and in 2020 they expanded their service in more cities with the partnership of Redfin. An agent will meet the seller advising them the home selling process, and it would present them with the Opendoor offer as well. The Redfin also publishing the Opendoor list, the homes the company has bought and reselling. Do watch this video till the end because I'm going to talk about the weaknesses as well. So let's talk about the financial strengths first. The company has total revenue of 2.33 billion, market cap is 17.61 billion at today's price. Total cash and equivalents are 551 million, which is good. Revenue is increasing. Debt to equity ratio is 0.40, which is also good. The interest ratio is 3.119. This value is also higher. The company would be more solvent, and the debt to capital ratio is 0.0159, which means only 1.59% of the capital comes from debt. Current ratio, quick ratio, absolute liquidity ratio all looks good. Institutional ownership is more than 31%, and SoftBank holds a majority of the shares. As a growth perspective, it's a good thing, but a little bit volatility could be expected. So let's talk about the weaknesses. The company announced a massive layoff, cutting 35% of its employees, and OfferPad is offering services in more markets as well. As the company is in iBuying business, generally the earning margin is very low, and as expected, the annual and quarterly earnings are decreasing. Revenue quarterly decreasing, and total debt is 270 million. Which is less than the total cash they have, and the net income is minus 198 million, which is like a negative sign, and solvency ratio annually is minus 19.74, which is not good at all because of the negative net income. Talking about opportunities, there are massive opportunities in this industry because it's $1.6 trillion per year industry, and 5 million homes are sold annually. So it would be a great opportunity to capture that market, and converting it to the iBuying thing is a good opportunity in my opinion. Opendoor is also capturing more website traffic than the OfferPad. There are obvious threats to this company as well. Zillow is also in the same race. OfferPad is offering their services in more markets, as well as the fluctuating housing prices and FED interest rates would be a bigger threat to this industry, I would say. The company is not paying any dividend, which is good for growth stock. I couldn't find any scandal of this company. Management looks good because CEO has a solid background. He was a founder of Movity, a real estate startup, and it was acquired by Trulia in 2011. And he also has 6% of the ownership of this company. Time for the conclusion now. I'm heavily bullish on this company because after the pandemic thing and people are moving on the internet more and more, so I believe there is a huge potential of growth, and the company is still at 17 to 19 billion dollar market cap. One thing should be kept in mind, that the company cannot generate more earnings, I believe. If they move smartly and list their house on Airbnb and rent out their inventory, then they can increase their earnings as well. I'm confident about the management because they are collaborating with the other companies as well, like Redfin. I think currently stock price is reasonable, and I'm expecting its value to 80 by the next year. So that was all, my friends. If you really found this video informative, then do subscribe and hit the notification bell on, and share this video with your friends. I'll see you in the next video.